Hi, I'm Richard Pennell from The Mortgage Home, and we are your buy-to-let mortgage experts. Now, in this video, I want to talk about whether the Bank of England will cut interest rates tomorrow. I'm recording this on Wednesday the 17th, and of course, the Bank of England, the Monetary Policy Committee, to give them their proper title, are meeting on Thursday the 18th at midday. So, first of all, we've got to look at some clues as to whether rates will drop. And the first one is last month's meeting in November. It was a really close affair. It was 5-4 to actually hold rates. It was that close. 4 of the 9 members actually wanted a rate cut last month. Now, there's been 3 rate cuts already in 2025. And so there is a little bit of prudence to say, look, we've got a budget coming. Let's see what happens there. And so they paused it in early November so Rachel Reeves' budget could get out and see how that settled. Now we're into December. I've had many clients asking me the question, will rates drop at the December meeting? And I've said, listen, the real metric we want to be looking at is not what happens on Thursday the 18th, but it's what happens right here, right now, today on Wednesday the 17th. Because today is when the inflation figures come out. They come out monthly. Now, last month, inflation was at 3.6%. And I've been saying to clients, look, watch this space. If inflation drops significantly in December, then I can guarantee that Bank of England will follow suit the following day and drop their interest rate to 3.75. They'll drop it by 1/4. And this is what happened. Inflation was at 3.6. So today, it drops to 3.2. Now, the Bank of England weren't even expecting it to drop that much. They were saying 3.5. So for it to drop a further 0.3% is fantastic news for landlords, for anyone wanting a mortgage. So the bigger question is, will mortgage rates follow suit? Well, the answer to that is yes and no. What am I saying by that? Well, the yes, if you are already on a variable rate mortgage, if you're on a tracker rate mortgage, and these products track or follow the Bank of England rate, then absolutely the lender has to pass on that 0.25% saving. And you'll see that in your January mortgage payments. Now, for the rest of us, or for us that are looking to purchase or we're going to remortgage anytime soon, then the question is no, mortgage rates are not going to drop by 0.25% tomorrow. Now, that's not bad news. It's actually the opposite, because what's been happening all of December is mortgage rates have been dropping incrementally. Because what we really look at when we're as professionals in this industry is we look at something called swap rates. And swap rates are a better indication of the direction of travel of the overall interest rate and the economy and the welfare of this country from a financial point of view. And swap rates change daily, weekly and monthly. So we can see every single day, we can track the progress and the trajectory of interest rates. Unlike the Bank of England rate that only moves every 6 weeks. So it's a really clunky way of trying to figure out what's likely to happen. So that's why swap rates are really useful indicator. And therefore lenders get their confidence on the direction of travel of swap rates. And as I said, they've been continuing to come down during December. So guess what? They've been passing on the saving already, and they're not waiting until the 18th of December. That's how confident the lenders are that the interest rates will drop, that they've already been passing on that reduction. So as brokers, we've been seeing that reduction for the full month. So here's the thing. If you've had research done, let's say in the last few weeks, 2-3 weeks ago, get it refreshed, because it's probable that rates will have actually dropped over that period of time. Now, what if you've had an application in and you've already gone to offer? Well, it's a little bit messier now, because there are some lenders that don't actually allow you to change products once an offer's out. Sorry about that. Now, there are other lenders that say, yeah, you can. If you let us know, we will look to change the product. But it's not quite as easy as that, because here's the issue. For those lenders that do allow it, the vast majority, it's all computer driven. And what happens is your original offer gets cancelled. Then a credit check is done. And if everything's fine, you get the new mortgage offer on the low product. So do you hear what I said? A new credit check is done. So there is a gamble. So let me just talk worst case. What if all of a sudden your credit score isn't strong enough? Did you take out any new debt since the original application went in and that original credit check was done that might actually negatively impact your credit score? Could you have been late on a payment in the last few weeks since that application went in? There's those sort of gambles. Even lenders change the level at which you are pass or fail a credit score. So you might have not have done anything different with your credit score and credit report. The lender might just have simply changed set the bar at a different level as to what is acceptable and what isn't, what score is acceptable. So it might only be a small gamble, but it's not an actual guarantee by putting that request into a lender that you'll get the new rate. So please, please, please think carefully. If you're going to ask us, talk to the brokers. Let's take a view. Maybe let's work out what those savings will be. Like if the product has reduced, what does that mean in terms of pounds and pence? And if it's quite modest, then perhaps I would actually err on the side of caution and leave that mortgage offer alone. We don't want to jeopardize that purchase, that refinance. So think really carefully about that. Really, finally, what's going to happen into 2026? My prediction is that rates should continue to drop right now. I mean, of course, something can come out left field, as has done in the past. But right now, given what we know, I would expect further rate reductions in 2026, at least a further 2, if not 3, from the Bank of England that will bring rates down to the low 3s. And again, we should see that hopefully translating into lower mortgage rates right down to under 3.5%. 3.25% down to around that 3% as we go through 2026. I really hope that's been positive, that's been useful for you. If you've got any more queries, do make an appointment to chat to the team, see that might impact on you. Other than that, have a fantastic Christmas, have a great new year, and we'll see you on the next video.